and bring down inflation. I spoke with National Economic Council Director Brian Deese and asked if he was shocked by today's number.
It was a surprisingly strong headline number, and so certainly reinforces the strength and resilience of our labor market. But I think under the hood, there were a number of pieces that were positive and positive in what we want to see, which is this transition to more stable growth as well. I would point to labor force participation, that increase, particularly for prime age workers. We're now at seeing higher levels of participation, more people coming into the labor force. I think that's a healthy sign. And then, of course, on wages, we saw stable growth in wages, but moderation there as well. So I think that both of those signs, alongside the very strong headline number, reinforce that we've got a strong, resilient labor market, and we're seeing that progress while inflation is coming down. So I think that these are all pretty positive signs for where we are economically.
Yeah, maybe, but the market's not taking it particularly well. Stocks are selling off on this idea that the Federal Reserve is going to have more work to do now on tightening to crush inflation and weaken the economy. Is that the right takeaway?
Well, look, more jobs for more Americans and people making higher real wages is good news. It's good news for the economy. It's good news for people across this country. And I think if you zoom out just beyond this 1 month, what we've seen over the last couple of months, the last several months, is precisely what we want to see in this transition. Resilience in the labor market, continuing to hit these historic levels in terms of low unemployment, the lowest in 54 years. While we're also seeing price increases come down. We've seen inflation moderating. We're seeing those signs across the economy. So that's what we want to see. Obviously, you know, we're going to have to keep a close eye on these things. But I think it's hard to look at the last couple of months and not see like we've made very significant progress, certainly from where we were several months ago.
I know, but does this? I guess my question is, does this make you fear that inflation will not come down as fast as we need to see? Yes, it's great news that we're still hiring. It's great news that wages going up. But we don't want to see inflation turn around and continue to march higher or stabilize around these high levels. So does this make you worry about that?
Well, I would say a couple of things. First, I think this report underscores that we all need to have a high level of humility in looking at traditional models that have predicted past bouts of inflation. I think it reinforces the unique nature of what's going on in our economy right now, and that shouldn't necessarily be a surprise given that the pandemic and the response to the pandemic, supply chain challenges are all really quite unique things that we are living through. That's number one. Number two is that what we want to see is more people coming into the labor force and wages moderation and not increased upward pressure. We saw both of those things in this report as well. And so I think at the end of the day, if you step back, we're seeing more jobs, real wage increases, low unemployment, and inflation all coming down. That's good news. Obviously, we need to stay vigilant, and we still have a ways to go here for sure. But I think that we should take the progress that we are seeing in the real economy on both of these fronts and try to build on that progress.
It's why this jobs number was so surprising and is a little bit confusing, because it's hard to square, Brian, with what we've seen, the layoffs in the tech sector. And I know it's a small part of the economy, but they've spread to the banking sector and chemical companies and toy companies, all trying to be more efficient, and some real weakness in manufacturing and housing. So two key parts of the economy. How do you put all that together with what's happening with jobs?
Well, look, I mean, I think that the headlines and the breathlessness over some of the tech sector layoffs, I think, was what it was, exactly what you said. If you look at their share of the overall labor sector, I think that there's a lot of extension of that and breathlessness that was overdone. Number one. Number two, if you look at weekly unemployment insurance claims, what you've seen is over the last 6 weeks, we've seen those continuing to come down and hit record lows, and we saw that in the JOLTS data, the hiring data as well. So I think that we are continuing to see a picture economy-wide. Certainly there are differences in different sectors, and we are seeing some weaknesses in some sectors and growth and strength in others. But economy-wide overall, we have a strong labor market, a resilient labor market, and we're seeing that resilience even in the face of prices coming down. So I think that's the core takeaway here.
And then in the services number, too, was pretty decent today. It does make you wonder if the economy overall is accelerating or stagnating right now. Which is it?
Well, look, I mean, we have for months now been in this constant state of people projecting 3, 4, 5 months out and saying there's a recession on the horizon. There have been people who are saying that we're actually in a recession now, which I think no rational person can look at the data that we're seeing in the economy right now and draw that conclusion. I think what we're seeing in this economy is resilience. I think we're seeing resilience as we continue to move toward a more stable equilibrium and more steady growth. I think that is what we're seeing right now, and there's no certainty that we will see that going forward, but certainly what we have seen over the last couple of months should give us increased confidence in that outcome. And I would say from a policy side, there's a lot of things that we can be doing to try to reinforce that outcome. In particular, implementing infrastructure, innovation investments, clean energy investments in a way that gives companies the certainty to invest through this transition. And of course, avoiding the kind of unbelievably negative self-inflicted wound that we could do if we had, drama around the debt ceiling.